O'Brien.
Hi folks, Basil Chapman here, sitting in for Tommy O'Brien. This is the Tom O'Brien Show on this Tuesday, the 30th, and the last trading hour of the month. And we're looking at the Dow, down just a tad, down 7. Look at this pattern here. I'll show you this pattern that I'm looking at to see if it's going to unfold or not. We just don't know. Let me just give you, if I can move that away. There it is. Now, let's scroll up. Yeah. So there's a pattern I always look at. I look at 3 core lines: straight line up, straight line down. That's 1. A cup formation and an arch formation, a mix of 1 and 2 or 1 and 3. On the way up, you get these reverse Y patterns where if you take out the left side high, you can go higher, and you can see each one of those Ys going to the upside. But on the downside, if there is a rally to just one peak, call it a peak A, or the second peak, which will be peak B, and then it fails and takes out the left side low, that's a real problem. So let me just show you what I'm looking at here. It hasn't happened yet, and I'm going to explain something right here. The Dow went to an all-time high of 46,714 on the 23rd of September. And it pulled back in 3 sharp sessions to the downside to the 45,785 level, just 1,000 points. And then it ran up to about a 50% line, and it's kind of stalled there. So it'll be I need to go to this chart right here and to show you something that I consider to be very important. Let's go click there and go there. Okay. So this is a pattern that I look at all the time. If the 9-period moving average, the green line, is above the 14-period exponential moving average, the black line, and then it turns below it, it goes pink. But look at the steadiness of the moves to the upside. And within that context, we're still green. And that 9-period moving average is above the 14-period. So until the price of the Dow goes sharply lower, and in sell signals that go to sell modes, you should get some bad news that impacts the market, and the market just tumbles down, and the Dow's down 480, then 570, the S&P's down 52, and then 64, and tries to rally, can't rally, and at the end of the day, it closes at the low. Overnight, overseas markets try to rally, and it fails, and it closes at the low of the day. Then the morning opens weak, and then it tries to rally, and then it fails, and it goes down just as sharply the next day. We have not seen, look at this. You haven't seen one of those forever. Look, since the April low, we haven't had anything close to that. So as I see it right now, so on a purely technical basis, because of this dreaded H pattern, this lowercase h pattern, we did implement a short on the Dow. We do have a 3 times long position, a core position there left, and I did as insurance, because we have a long positions that are really good. I didn't want to get too carried away on the short side, so I said wait for a dip in the Dow. If it hits a certain point, we can, because it could continue lower. Let's just enter a short position, which is what we've got, with a very tight, like a 1.2% stop, just as kind of an insurance, and that's where it is. But we haven't rolled over. It would have been if we're at the low of the day of 46,100, then it would look like, it's turning up. But that 9-period moving average you just saw in that chart, look, it's still very, very strong. Let me get rid of this. I think it's just messy. It's not proving anything. It's a rising wedge formation. There are certain patterns that go with it, but I don't have to talk about it right now. Remove the trend line. Okay. So I've got these 9 and 14-period moving averages as good support. Okay. Now, as it stands right now, so the Dow is still holding very well. The MACD is weak. The relative strength is weak. Stochastic is weak. And the on-balance volume is rallying. That's good. But though my core indicator here, the 914, is still holding very, very well. Look at the S&P. Slightly different chart. A slightly higher bounce after the 66.99.52 low of about the 23rd of September. And it's holding very nicely. Look, that 9-period moving average is way above the 14, but the MACD's gone weak. That's the red and green line. The relative strength is somewhat weak. The stochastic is under 80% to 72%. On balance, volume is good. Then you've got the QQQ. I'm not going to go through each one. I say it's almost the same thing. 9-period over the 14, very strong. MACD is still actually very good. And if you go to the IWM, this one is very weak. These are the iShares Russell 2000 ETF. These are the small caps. They're impacted by yields, and a lot of them are much lower price in stocks like the S&P and the Dow. So this is got that H pattern. It's getting closer to rolling over, but it hasn't. It's down $1.06 at 240. I want to go quickly to gold. Gold is up $22 at 38.78. It's just been brutal. I mean, if I had to show you this right here. Look at that. Let's go to gold. Look at that. Look at that move. Look how far, way up above the 14-period moving average, the 9-period moving average. To get that to flip to pink, you'd have to see gold probably down at the about 36.28 level, and here it is at 38.78. Let's go back there. And silver's the same. Silver's the same thing. Look, silver is down 31 cents. It's just turning down off the all-time high, and the 9's still very strong over the 14. So to get these different mediums, different sectors to really pull back sharply, you have to get a brutal bad news that just it permeates the market very quickly. And then if the VIX index starts to trade into the 90s and then quickly into the 20s, you'll start to get that sell-off. We just haven't had that right now. It could happen, hasn't happened yet. I want to just show you something very interesting. High-grade copper has pulled back a little bit, but it's still acting very well. It was very weak before. It's coming back quite nicely. Crude oil right there. Crude oil is trading down. And let me just explain this right now. I don't want to go into in my show, Tiger Technicians Hour. I'll do that. You'll see it tomorrow. I can do that. I'll explain it at 10 o'clock tomorrow Eastern Time. I'll explain a little bit more. But look, this is the inside propellant zone. We always look when you get to a D. That's where other things can happen. And look at that sharp pullback from that peak D. So I'm watching this closely. If crude oil goes under 61 in the next 3, 4, 5 sessions, that's really very weak. If it bounces, it needs to bounce very sharply. I want to also just show you here the bonds, the TLT, as we go to the break. The TLT is down 37 cents at 89.26, and the TBT, which is the yield, has pulled back, but is actually up on the day. I'll be back in a moment. Basil Chapman sitting for Tommy O'Brien in the Tom O'Brien Show. Be back in a moment. Now it's up 11.